SBI Life makes a steady debut on the Lal Street. The state-owned lender's life insurance arm has listed with a 5% premium to the issue price of $700 a share. The management, meanwhile, expects to maintain the current margin levels going forward. That's the SBI Life stock for you. And here's the excerpt of our conversation with the management.
See, the way we look at market share or growth is not so much as to where we would like to be and things like that. We look at the potential. So in SBI Life, we have very strong distribution channels available in the bank assurance, where you know that SBI is the largest bank with a large number of branches. And also our agency channel has been built up very well. So both in agency channel and bank assurance, we have been doing very well. And actually higher or almost double the industry growth rate in each of the channels. So in agency we are growing at around 20%, industry has been growing at around 10%. In bank assurance we have been growing at 40%, overall industry has been growing at 20%. So it is this strength which stems from the fact that we have very dedicated people in the company and very good distributors, and we want to ensure that this potential which is available to us continues to keep getting tapped, and the market share will be a consequence of that. We are not so concerned as to whether we are going up or down, in one particular year.
All right. If you look at your product mix, it's pretty much well diversified. We are having 50% as linked and the remaining between non-par and par. Do you plan any further changes within this entire product mix? And if so, how do you see the entire VNB margins as well as your overall return on embedded value to in fact change on account of that?
Right. So actually, again, just to clarify, our product mix also is not based so much on our internal profitability calculations as much as it is based on the needs of the consumers and what they are looking at. Having said that, the current product mix that we have with ULIPs being at around 50% and traditional the remaining 50% and protection being around 5% is a consequence of the demands placed by the consumers and the fact that we have products across the entire range.